Good morning and welcome to our webinar today. I'm delighted to be joined by an expert, Richard from Avalara, because today we're going to be looking at VAT changes coming in the EU. And frankly, it's quite complicated. So I'm really pleased to welcome Richard back again, who can hopefully make it simpler and more understandable and let us know what's going on. So welcome, Richard. For those that have not met you before, tell us a little bit about yourself.
Yeah, hello, Chris. Thank you again for having me back. And hello, everybody. First of all, I have to say, I'm personally, on a personal front, I'm delighted not to be talking about Brexit for the 10 minutes of my life and not explaining what on earth happened on the 1st of January. And as a relaxing break, you and I are going to be talking about something which is going to feel equally as complex and perplexing. But hopefully we can do it in our usual nice, crisp fashion for everybody. But as you say, just very briefly, I work at Avalara, which is tax technology company. So my job is to stay up late at night reading about all these changes and try and figure them out and worry about them. So that people like you and everyone on today's webinar don't have to. And then I go and spend my time talking to very clever technology people at Avalara who then build it all inside our technologies. So whether it's Brexit, whether it's EU VAT, whether it's foreign VAT reporting in Europe, all around the world, it's all nicely automated. So everybody can get back to what they really want to do, which is grow their business and not try and become global VAT experts like me. Honestly, do not make that like your life cause. It turns out not to be as fulfilling as I was promised.
Well, I know we've got quite a lot to go through today, and I know the start of your presentation is going to be ultra interesting because actually the VAT changes happening in the EU. We've already kind of seen similar changes for the UK, where people are selling into the UK. So if you're not a UK-based seller, you're probably already slightly familiar with the changes that are coming in the EU, although I'm sure there's some differences as well. But I think it's worth having a look at the January the 1st update that happened in the UK. And if I'm right, and correct me if I'm wrong, Richard, I think the EU were planning to go at the same time as the UK, but they delayed the VAT changes because of the pandemic and everything else that was going on.
Yeah, that's right. What we'll do first, I think, is just get an update on that. Anyone who's not familiar with 1st of Jan in the UK, and then that sets us up nicely because they are a very similar set of reforms. I think the UK ones are a bit blunter, which reflects just the distractions for HMRC of Brexit, getting everything done at the same time. And then we can roll on to the EU ones and see what the details are. And, if you are experienced with the UK ones, and it obviously has made a lot of news, you'll recognize all the concepts and structures, but there's a lot of important differences. And some people call them simplifications, other people call them complexities. So we'll try and explain those. I guess just before I get to your question, though, there's just too much for us to cover today. And, don't try and remember this all. We at Avalara, we've put together a really useful online hub. And you can see it there up on your screen. If you just look for Avalara EU reforms, e-commerce VAT reforms, then there's a great hub collection of blogs and download guides. It's all in there. So don't worry too much about what you don't pick up today. It's all explained. But sorry about that, Chris. It took me a minute or two to get to your question.
Absolutely. And just as a normal practice, we will, of course, be recording this webinar and we'll make it available on Tamebay TV on YouTube and on Tamebay. And we'll add a link into that hub for you as well. So don't worry about trying to find it now. We'll make sure you get the link later.
If I known I was being recorded, I would have made a bit of an effort this morning. I would have washed and stuff. But so apologies for that. Yes. So let's look at what happened with the UK. As you say, Chris, we obviously went through a lot of changes with Brexit, but separately on the same day, because HMRC thought we didn't have enough to do to cope with Brexit, they reformed the UK e-commerce rules and introduced a lot of the measures that we're going to see later in the presentations, the ones that are coming in July in the EU. And so the big headlines there are, number one, if you're a UK seller, and you're selling to a UK consumer, or if you're an overseas seller selling to a UK consumer, and this is the crucial test, the goods started their journey from outside of the UK after you've made this sale online to your UK consumer, then the rules change there. That's what HMRC is targeting. So previously, as it showed, you can see up on the slide there, you could have sold those goods if they weren't above £15, VAT free. They just flew straight through the customs system. Guess what? Surprise, surprise. If goods don't get checked coming through the customs systems, not very nice people spot this and they start to commit lots of fraud. So HMRC wanted to close that off. So now instead, you must charge in your checkout live UK VAT on all goods. You can't leave it to the border. You can't leave it to your consumer delivering DUP. Duty unpaid, and let the consumer pay the postal, the DHL delivery man when they show up at the goods. You can't do that anymore. If the consignment, which is the value of the goods, or if there's multiple goods in the same package, the consignment, if they're not exceeding £135, that's the new magic number for you all to remember, then you must charge UK VAT at 20% on almost all goods. In the checkout, and then your UK sellers will obviously be VAT registered. But if you're not a UK seller, you must now be UK VAT registered, and then you report that VAT into HMRC on a quarterly basis. And then, secondly, in terms of reforms, they brought in deemed supplier, which means the marketplaces are responsible for some of those transactions too. But we won't dwell on that because I think we'll get a chance to come back to that when we look at the EU reforms, which I think we can go to next.
Yeah, and I think the EU reforms I think they were always going to be a bit more complex and nuanced, because obviously the UK it's 4 countries, but for tax purposes, 1 country, whereas the EU, you're dealing with 27, I think it is, that left different tax authorities.
Yeah, that's right. That's the complexity. Instead of 1, it's 27 now that we have to deal with. So the EU rather, has introduced 3 reforms, and they will resonate with the UK ones because actually they were designed together pre Brexit referendum back in 2016. And when the UK was decided to leave the EU, which happened, the EU VAT regime, which happened after 31st of January 2020, the end of the transition period, it decided to go early, as I just said. So let's go to those EU reforms. The same reforms, but as you say, Chris, modified because we've got 27, not 1 country. So number 1, and this is really going to hit, I think, UK sellers and sellers from around the world, is the ending of the distance selling thresholds. Now, what that means is if I'm a UK seller, I can happily sell to France or to Germany to consumers there. I should charge them VAT, but I can charge them UK VAT at 20% on most goods. And that's great. I can keep selling into Germany until I hit the German distance selling threshold, which is €100,000. It's quite high. You can build up a nice little business if you spread your custom around Europe using those kind of thresholds. Most other countries, the threshold is €35,000. So France, for example. But the point is, I think for micro small businesses, it was a great way to start experimenting, use some of the marketplace facilitation services and promotions, selling across the big marketplaces without getting caught in the VAT net and having to get VAT registered. So there's a bit of a loss there, an important loss. However, the good news is, and this is where we get a big difference, the first big difference that you're asking about, Chris, is the EU, rather than forcing all sellers who are distance selling to get VAT registered in Germany when they make their first sale, or France when they make their first sale, they're introducing a new type of return. It's called a one-stop shop. If you're in the e-commerce sector, you've possibly already heard of OS, as it's affectionately termed, but you're going to be hearing a lot more about it. And put very simply, what it means is you just get registered once for the whole of the EU. You can continue to sell goods and you report the VAT for all your sales, Germany, France, Spain, Italy, Hungary, in the single return. And you must charge the VAT rate of the country of your consumer. So that's the one complexity in it. But the delightful news is you just now have one EU VAT registration when you're distance selling like this, rather than multiple. So that's the positive news and how they've managed the 27 countries.
So I think this is really interesting because obviously a lot of even larger companies would have liked the thresholds and be able to kind of test sell into Germany up to 100,000 euros before they had to register for VAT, and they could proof of concept test whether their products were going to work in that country. But actually, when you think about it, this is in some ways even better, because if you've proof of concept and you're now selling in Germany, previously, if you then started selling in France and Poland and Italy and Spain, up until July, you've still got to register for VAT in each of those countries when you hit the threshold. Whereas if you proof of concept Germany and you're on the OSS, then when you decide, I'm going to now try France, you don't have to do anything other than add more details to your tax return, if I'm correct.
That's exactly right. I think it's a really great positive step, and it's going to simplify e-commerce into the EU for everybody. And just obviously, I can see there's going to be a lot of UK sellers on here. We're obviously out of the EU VAT regime in this country, so don't worry, you're still allowed to use this. It's called the non-union scheme. You would just register in one of the EU countries, pick whichever one suits you, and you can register as you're termed a third country. The UK is a third country under VAT terms, but essentially you enjoy all the same benefits of OSS as an EU trader. So you don't lose out. The one thing you would have to do, though, is move your goods to somewhere in the EU, say Netherlands because of Amsterdam, or Belgium because of Antwerp, because they've got very good ports, and then you can distance sell from there. But otherwise, the UK doesn't lose out too badly on this one.
So I've got to ask, Richard, you said I can register in any country I choose. Is there a rule that tells me which country I have to register in? Or if I can choose, is there a country where maybe it's cheaper to register?
There's no rule. It's up to you. What the authorities would expect you to do, and they'd be curious if you didn't, is register where you're going to be distance selling from. So in my example, I was saying it's Netherlands or Belgium. They're good countries to register in because the tax authorities are very open and they're very accommodating in terms of English language. So if that's where you're shipping from, then pick those countries. In terms of ultra simplicity, then we always recommend people head for Ireland. Clearly, it's the language, shared language, and also the Irish are incredibly flexible, and they've probably got one of the possibly the friendliest EU VAT regime at all. So any of those, I mean, just don't pick Italy or Poland, and I'll leave it at that, at risk of offending anyone.
Yeah, it makes a lot of sense.
I just a couple of sort of sundry points that I'll point out that I suspect, Chris, will come up in the questions, just to tick off before we move on to the next reform. It is possible, and this, we won't spend much time on this because this is only a benefit for EU sellers. If you're in the EU, so if you're in France and Germany, you don't have to use the OSS. You can use your local VAT registration, as long as your entire pan-EU sales are below 10,000. You could have to be a very small micro business to benefit from that, but it's a nice.
Yeah, that's almost like a consumer seller.
Yeah. But the big exception here, which I think is a big miss by the Commission on these reforms, is sellers, and this will be the majority of sellers these days, who are holding stocks in different countries just for the sake of quick, speedy, efficient delivery and a great customer experience. So if you're a UK seller and you've got stocks in Germany or in France, a third-party warehouse or one of the big marketplaces warehouses, unfortunately, you don't get to benefit from the OSS simplification, the one return. Wherever you're holding stock, you're going to have to get VAT registered. And in VAT parlance, the reason for that is you've got to tell the tax authorities that you first moved the goods into the warehouses in Germany or in France, and that you're selling from those different locations, because otherwise they wouldn't be able to track why the goods suddenly showed up. So if you're using any of the big marketplace, pan-European VAT services, or if you're distributing the goods under their control, then and you've probably got lots of multiple VAT registrations in that case because of that. Unfortunately, OS doesn't cover this. It will do eventually, we believe. The reforms are probably going to come in maybe a couple of years' time.
So I think the big one people will be looking at, obviously there's many like Cdiscount, for example, but I think the big one that people will be looking at is Amazon. And that probably means if you're putting stock in Amazon, it might be in Germany or France or Czech Republic or Poland. Does that mean I've still got to be VAT registered in each of those countries?
Exactly. And this is, as I say, it's a miss by the Commission, the European Commission. We believe it was because this reform was designed way back in 2014 when those sorts of facilities, FBA fulfillment by Amazon, and obviously there's others, Cdiscount, you said, everyone can see Alibaba and AliExpress are catching up on all of those, and there's plenty of others. They just hadn't been foreseen by the tax authorities. Unfortunately, it's always the way with tax authorities. They're always 5 to 10 years behind business models, especially something as fast as e-commerce.
So just to clarify, if I've got my own fulfillment place in the Netherlands or Ireland, I can use OS.
Yeah.
But if I'm using something like Amazon or Cdiscount's fulfillment services, then probably I need to register in each country individually.
That's right. Yeah. As soon as you start having more than one, you can't use OS. OS is really about having one stock somewhere inside the inside the EU. Yeah. Which brings us on to the next one. And I'm not sure, Chris, we went through this a couple of months ago with you. The EU is going to have a similar reform to what the UK has already done around withdrawing. And remember this catchy title: low value consignment stock relief. And you can see up on the screen there, the magic number in the EU was, or it still is until the 1st of July, I should say, is €22. So that's their equivalent of the UK's £15 threshold. Yeah,
roughly the same value.
They were not today, but when this was
not with today's exchange rate.
When the pound was, I'm going to sound very Harold Wilson. When the pound was worth something in your pocket, that was probably the right exchange rate. And I've probably queued about I don't know, a few hundred millennials to go and search online for who was Harold Wilson and what was his involvement in the creation of the e-commerce market. Don't bother. So the EU is scrapping its low value consignment relief threshold of €22, and that's going to be done away. So what it means is, in the same way as the UK, we talked about the UK, VAT is going to always be liable on the import of goods, and this is where it's the same as the UK. How is that going to? What are you going to be expected to do now? You as a seller are going to have to calculate live in your checkout EU VAT and show that to your EU buyer. Now that's quite a challenge. So firstly, a lot of e-commerce systems and whatever system you may be using, point of sales type systems, aren't set up for that. We're starting to see some of them are getting prepared for this, and obviously they've had a dry run with the UK reforms. The big challenge, I think, though, around this, well, there's two challenges. Obviously, firstly, the live calculation, but secondly, which VAT rate do you use? Because obviously the EU member states, 27 member states, they're all allowed to set their own standard VAT rate, and they vary from the lowest is 17% in places like Luxembourg, and the highest is a whopping 27% in Hungary. So when you charge someone, you're going to need to know where they come from, so that you can get the VAT rates right in the checkout, so you can do an accurate quote.
Question that so many people ask over the years, and I'm still not clear on the answer, and that may change with this, is if I'm based in France, but my shipping address is Germany, do I use the French VAT rate or the German VAT rate?
It's where your consumer is. So in your case, it's Germany. And it's what you have to divorce. You have to think about where the goods come from and where are they going to. And it doesn't really matter where your legal company is. That's from a VAT perspective. That's how we look at it. So in your example, you would have to charge them German VAT at 19%.
So if I live in France and I'm buying a present for my brother in Germany, it's German VAT rate because that's the ship address.
That's right. Unfortunately. Now, the good news is, just to tie back to the previous slide, is all these sales that you're making at these different VAT rates, you can report those in your OS. So you're VAT registered. That's the first step. Get VAT registered in OS, and then you can start charging VAT in your checkout at the local rate, quote it live, and then you can use that information to complete your OS at the end of the quarter. So it's good news there. So you can see how it all ties up and how they've tried to withdraw some of these loopholes, but keep it simple for everybody. I think they've done a good job.
So that's what's happening when you sell something on VAT. But what else is happening? What's happening when you're actually importing goods?
Yeah, well, that brings us to the second of the big three reforms, and again, this mirrors what's already happened in the UK. If there's a new magic number for us, you'll remember the UK. I was talking about 135 pounds. So there's a new number of 150 euros. Now, if you're a seller and your goods are outside of the EU, so maybe they're in China or they're in the UK if you're a UK seller, and you sell to a German consumer, as I said, as we just talked about, your brother, I think it was, in Germany, you're going to buy those goods, and so you're liable to 20%, 19% even, German VAT. Now, if the goods are outside of the EU, then the system for this is there's a new green lane, and you're going to charge in your checkout German VAT at 19%. You only have to do that on consignments that go up to 150 euros. Now, this is where it's very complicated. The first question everyone will always ask me is, why is 150 euros? Why isn't it just blanket number? To make it simple, because you can imagine, first of all, you've got to identify that the consignment was 150 euros. The simple reason is customs. Customs were unwilling, the EU customs, they were unwilling to change their systems. And as many of you will know, the customs duty threshold at the moment is 150 euros. And so they wanted to keep it simple. So what we've done there is we've leveled the playing field between VAT and customs at 150 euros. So if you're selling goods and the goods are going to Germany, in your case, then you'll charge 20%. They're coming from China. You'll put your OS VAT number, and we've got a new variation for import. It's called IOS. It's a slightly different system, but effectively it's the same. You'll put your IOS number on the package. That will tell German customs when the goods arrived that you've correctly charged VAT at 19%, and that's fine. The German customs will see that, and they'll just waive the goods straight through. So this is why customs authorities, they're talking about a new green lane and making the sale of goods to consumers much easier for sellers. And then at the end of each month, you can put that through your new OS return, that VAT, and declare it to it. So in our example, we talked about getting registered in the Netherlands. You can declare it in your IOS return in the Netherlands, which you've got registered for. So it's the same reform. Yeah, sorry, go ahead.
Sorry, I've got you mentioned putting your IOS number on the customs form. I'm guessing that if they haven't already, that by the 1st of July, all the carriers will have to issue new customs form to have a space for that number?
Yeah, well, you're picking me up there quite rightly. Number one is you've got to get registered for IOS. So like OS, if you're doing this type of transaction, you'll be able to do that from 1st of April, and then you'll be given an IOS number. And then what you're going to have to do is in the customs paperwork in the declaration, you're going to have to declare the IOS number. So you're going to have to give that to your, for example, give it to your freight forwarder. What you shouldn't do is actually put it on the parcel label. It is confidential. You need to pass it to your freight forwarder, and the freight forwarder will include that in the customs declaration or the customs paperwork. So that's just one subtlety. And the reason it's not on the parcel is because they're nervous that, like VAT numbers, if this becomes public information, people will start to abuse it. But what we are seeing with the freight forwarders and fast parcel delivery companies, those types, they are gearing up towards this. So they should be ready for it. The main takeaway here is, obviously, if you're selling for goods below not exceeding 150 euros, go and get IOS registered. Same advice as OS. If you're from the UK, you can use the non-union scheme. Get registered. You don't, because the goods were outside the EU. You don't need to worry about being registered where the goods were, like we said in the OS, in the distance selling. So in that case, IOS, you could think about picking Ireland for all the reasons we talked about: simplicity and ease.
And you can start this in just a couple of days' time on the 1st of April. I'm not going to mention it's April Fool's Day, but April, May, June, you've got a couple of months to get registered before the 1st of July.
Yeah, I wouldn't guarantee that all the tax authorities will have their portals up and running. Places like Germany have sound the alarms on this, but yeah, you've essentially got 3 months to do this.
It's looking like it's going to be quite a bit of work to put in place by the 1st of July. What else do we need to know?
Yeah, and well, that's a good segue into extra requirements on UK sellers around the IOS, the importation. Now, those of you that may be familiar with a fiscal representative, that's some countries, some EU countries, that don't take the best of view of third countries, non-EU countries, in terms of VAT liabilities. So often what they do is they insist that you appoint a local special tax representative called a fiscal representative. Those of you, as I say, that in the UK that are VAT registered across Europe for the current distance selling threshold regime, then you'll have gone through the scare of thinking you have to get fiscal representatives in places like Italy and France and Poland and Spain. Now, luckily, most countries withdrew that requirement because of the free trade and cooperation agreement that we struck with the EU on the 24th of December. Anyway, there's something similar here to watch out for with IOS. You're going to need, and they don't call them a fiscal representative, they call them an intermediary. And that's a local accountant that will represent you. Whichever EU country it is, you will need to appoint an intermediary. So even if it's Ireland, which generally doesn't require a fiscal representative for a normal VAT registration, you are going to need an intermediary. The good news is most countries, we think the intermediary won't be directly liable for your import VAT that you've been charging in your checkout live. But that's good news, because it means their fees will be quite economical, closer to a normal VAT registration. This is something that we do at Avalara Intermediary Service. It's all part of regular VAT registration and return services. So yeah, as you say, Chris, just one more thing for particularly UK or any other non-EU seller.
Just another bit of legislation work that sounds, if they're not liable, it sounds almost like it's just regulation for the sake of regulation. But obviously, if you're using your services at Avalara and you can do it for us, then don't have to worry about that one. If I'm not using your services, then how do I go about finding one?
Well, yeah, it's good you say about regulation, because I often think this is a barrier to trade, and it keeps lots of lawyers and expensive accountants in business. And I suspect lawyers don't need much help in terms of topping up their annual income, but someone in the EU thought they needed a little bit of charity this year. You Google search if you want to. I think there aren't. And I regularly look because it's our sector, Avalara sector, but very few people have set up on this, really, because you can't, as you pointed out, you can't get registered for IOS until at least 1st of April. And it's not quite clear what countries, what obligations they're going to push onto the intermediary. As I say, we think it's positive. Most won't. make them jointly liable for your VAT, your seller's VAT, which means lower fees for you if you where you do have to appoint one. But as I say, it's not clear. But just to reiterate, obviously, Avalara, we do this all day long, so we're all set up and ready to go, whatever the requirements are.
Excellent. Well, that's an awful lot to get my head around. Are you going to tell me there's anything else I need to know, or is that it?
Oh, I know you'd like a break and you're pleading for me to stop, but let's keep going because we're now at the next one, which is, again, like the UK. The EU is introducing a third measure, and they're basically making marketplaces liable for some seller transactions. And this is we've all heard about how successful the marketplaces have been, helped sellers go global, international. But with that has come a lot of VAT fraud. In the EU, they reckon they're missing about 7 billion in e-commerce VAT fraud.
So I've got to say, this is really, really interesting because many marketplace sellers never sell anything over 150 euros. They're kind of 20, 30, 40, 50, maybe 100 euros. They're selling in the EU. Does this mean I can forget all about VAT registrations? And if I never sell anything over 150 euros and I only sell on a marketplace, I can just wipe my hands of EU VAT and never have to worry about it again?
Yes, is the blunt answer to that. And that's what the EU wants. It wants to take out as much of the seller transactions and move it on to the marketplaces. This is, if you think about what's going on in terms of tax reform, the tax office want to shift everything onto the marketplaces because they feel the marketplaces have created this problem, this challenge. So if you think about what's going on with the likes of Uber and some of the court cases that we've had in the UK and the EU, that's obviously a different area. That's the gig economy, but it's the same trend. So actually, yeah. Now, how much, in response to your question, how much trade will come off the seller's VAT responsibility or the seller's VAT inbox, if you like? It's really interesting. So we've had numbers from the big marketplaces. They think this is 80 to 90% of transactions from foreign sellers. So, and that includes UK sellers now that are outside of the EU. So this is really major. And the other point is, that you're making me think about, Chris, is now that I've heard you express it from a seller's point of view, as opposed to my normal dry VAT technical point of view, is if you're a seller, you think, well, actually, why don't I put everything on the marketplace? Obviously, there's a cost to that, and I lose some control, etc. But hey, if I can forget about VAT, which everyone knows is the single biggest barrier to e-commerce trade now, then why not do it? So there's no doubt this could really trigger a seismic change for many sellers' business cases. So I suppose, this is probably the most important slide of an issue that we're talking about today.
So I think we've got to be fair, and I've asked the question about, is this going to make my life utopianly easy and I'm never going to worry about that again? The other question I've got to ask you is, there's got to be some exceptions, which means I still need to register for that. And one is obviously imports over 150 euros. And don't think for a moment that if your products are all sort of 60 euro products, you never have to worry, because what if someone buys 3 at a time and that suddenly you've now got an import of 180 euros? So that's one exception if someone buys multiple goods from you that goes over the limit. What other circumstances are there that I'm still going to be responsible for the VAT?
Yeah, well, on your first one, you don't necessarily have to take care of the VAT, even in that situation. So as you say, if it's not above 150 euros and you've done it on a marketplace, then and you're from the UK, and the goods are coming from the UK, then it's a marketplace. Now, if it's above 150 euros, you can still, as today, you can still leave it to your French consumer to pay the import VAT. And you can either leave that for that nasty experience that everybody's trying to get away from, of the horrible, we've all been through it, the horrible surprise when you bought something from China or the US and it arrives and you suddenly have to dish out 20 or 50 or 100 pounds, and obviously the EU euro equivalent. You can still do that, Or you can, through your freight forwarder, you can take over the responsibility of paying for the import VAT, charge it through your checkout. But you don't have to get VAT registered. You can just take it on the chin as a cost. Your freight forwarder or your customs agent will pay the VAT for you, and then you have to pay them immediately afterwards. So it's still an option. DUP, delivered duty unpaid. That's still an option for you, but it's not a great customer experience. So that's one option.
I've got to point out there as well, for those of you that sell on Amazon, don't forget that Amazon has specified that goods have to be delivered without additional charges such as VAT and duty on the doorstep. So it's got to be delivered VAT and duty paid if it was sold on Amazon, regardless of whether Amazon are collecting the VAT or whether you are, and the same with duty. So it's got to be delivered, duty paid. Some couriers will already be able to do that. Royal Mail are stepping up. They've got a new service coming in that will apparently do this at a cost, obviously. But it's something that if you sell on Amazon, and I'm sure other marketplaces will bring in similar rules, that the price the consumer pays, that's all they pay when their goods arrive.
Yeah. Which brings us to point 2 on that slide. If you are using a marketplace, and let's assume you're from the UK. Now, if the goods are inside, so if you've shipped them into, let's say you put them in Amsterdam or the Netherlands, and you're selling from there into the rest of the EU, then Amazon is responsible for all of those sales. There is no 150 euro threshold. So that's great news again for UK sellers who are using any of the marketplaces. And you can be the double whammy of good news is you can be really passive about this. The marketplaces, it's their responsibility to identify these types of transactions. Number one and number 2, and tell you that they've triggered what we call it the deemed supplier, which means the marketplace takes over. That's triggered, and they're going to take those transactions off you. In your monthly report from the marketplace, they will list all the transactions that have been affected, and they'll tell you exactly how to report your VAT in your home country in the UK. So it's quite simplified. If you're operating within that, as you said, sub 150 euros imports, so the goods are coming straight from UK to your German or French consumer, then you're okay there. And then even if you've got the goods inside the EU for speedy delivery, and as you said, Amazon are assisting on that now anyway, you're not allowed to sell goods that haven't already been cleared through the EU customs and VAT regimes. Then again, great news is all of those transactions become the marketplace's responsibility. So you have very minimal requirements. It is very complicated, though, spotting those transactions and getting the reporting right. So, naturally, being a VAT technology company, Avalara would recommend that you talk to a good VAT technology company to help you through that. But whichever route you take, the key message is, just to give you a feel, we look at typically across our sellers what sort of profile of registrations they have, and we've got thousands. We've got about 15,000, I think. Most of them have got about 4 or 5 registrations, foreign registrations. We think they're going to be able to get that down to just one, that OS or IOS return. So and
I think it's just worth reminding people that this is only when you're selling on marketplaces. If you sell just one product on your own website, then it's back to doing your own registrations.
It is, but remember, you can use the OS. So if you're selling on your own, as you say, on your own site, but the goods are already in the EU and you're selling to lots of different, you can use the OS. So every time you ask a question,
the Netherlands.
Yeah, it is complex. It is complex. It's complex because of the loopholes. That's, the 150 euros. Am I under or over 150 euros? Where were the goods when they started? And I think the EU, they'll come back. They're planning in 2 years to come back at this whole regime and simplify it greatly. But hey,
so it's all going to change again.
Yeah. Well, again, keeps the lawyers and tax gurus like me occupied and off the streets. So So, there's some silver lining to the clouds.
Yeah. It reminds me of a Dave Gorman program, keeps the lawyers and the accountants happy.
Right. I guess just before we leave this behind, you were asking about use cases. There's a great sting in the tail here for retailers around the marketplace. So if we've got a minute, I'll just touch on it, Chris. And this has been accelerated by COVID, this trend. If you are a retailer and you've let other retailers onto your e-commerce site and they're selling through the site, but then they're responsible for, even if they're responsible for billing and fulfillment, under these new VAT rules, you are a marketplace. And this is going to be difficult because almost nobody knows about this clause in the
I've got to ask, this sounds like if you're drop shipping from your website, and you've got someone else delivering the goods into the EU, then you're effectively a marketplace and you're now responsible?
The example I'm thinking of here is, and I always think of it in old school, when you walked into the big department stores, Selfridges and Debenhams.
All the concessions.
Exactly, that's the word, the concessions. And these are, stores within stores. They're the ones that are affected. And so if you're the retailer, it's your customer, obviously, and you're in the checkout, the customer is paying you. But otherwise, the fulfillment, the delivery of the goods, and I guess, I see what you're saying now with drop shipping. Yeah, it is like drop shipping. You're quite right. I suppose the difference is in drop shipping, the customer doesn't know who the drop shipper is. But in this example, it's a retailer. You might buy a different branded jumper in John Lewis's website, and that jumper is provided to you directly by Pringle or somebody, and the goods show up at your door, and it's delivered by Pringle, etc. And you realize, oh, that was the thing I bought on John Lewis's website. And this is the sting, because John Lewis don't think they were responsible for this sale or the delivery or the VAT. They think of it as a Pringle jumper sale, but the VAT doesn't see it that way. They see John Lewis in this case. Sorry to pick on John Lewis. Hopefully, there's no one listening in. They see them as the marketplace, and so we think this affects thousands of retailers because, as I was saying earlier,
don't say John Lewis. Say Debenhams. It's a lot safer now they're gone.
Yes, or Miss Selfridge. Yeah, Burton. All in trouble. So just one reminder.
So be aware that if you're letting other people sell on your site, you're now the marketplace and you're now liable.
Well put.
Is there a limitation on size? If I'm really, really small, does it still apply to me?
Still applies to you. That's the cruelty of tax, Chris. If you haven't got to this point in life and you don't realize that VAT shows no favors to the small operator. It's everyone has to fill in a VAT return. You may have less zeros in your VAT return than the big boys, but unfortunately, you're still on the hook for that.
Yeah. Can I just make a confession there? Having been self-employed for something like 20 odd years, I have never completed a VAT return or a tax return. I've got an accountant for that because I know it's relatively simple for a personal tax, but it's just, I don't want to make any mistakes. I let the accountant do it. He knows what to claim, what not to claim. And I'd strongly advise anyone getting involved with VAT and the EU, find a professional. Richard, I'm sure you're going to put your email address up. I know Richard is always more than keen to talk at length to anyone that wants to talk about VAT and tax and regulation. So make use of the industry experts out there and get someone else to do the work for you is my best advice ever.
Yes, I couldn't put it better myself. Chris, you're going to be on the next poster campaign for Avalara. If you
Chris has never filled out a tax return. He's got an accountant.
I'll come visit you in strange ways, and I'll bring a cake.
And big shout out for Simon, my accountant. He does a sterling job. We've had an awful lot to take in today, Can you kind of summarize it and give us the key headlines for anyone? What do we really need to keep an eye out for? And when do we need to do things by?
Yes, exactly. Let's get down to brass tacks. Number one is if you're selling into the EU now, you're going to have to worry about VAT. So you're going to need a VAT registration. If you're an importer of goods below 150 euros, then you're going to need an IOS. And if you've got your goods already in Europe and you're selling across Europe, you're going to need an OS registration. You can get both of them in the same country, so it's fairly straightforward. If you're from the UK, then you're probably going to need an intermediary. So you're definitely going to need a very clever tax agent. If it's not Simon, then it could be Avalara. Next up, you, as I was saying, in the checkout, you're now having to charge German VAT or French VAT if that's where your consumer is on those import sales. So look to your e-commerce systems provider. They should be building in integrations now to enable you to do that automatically. So if you've got your customer's postcode or some identifier from that, it should be able to pick up from that where the country location, and then from there it's a piece of simple logic to get the right VAT rate, 19% in Germany or 20% in France. It's something at Avalara we work with all the big e-commerce platforms, and we're building that technology in for them. So hopefully one thing for you just to check, but not to worry too much about. As Chris, you were asking about the customs declarations and the pack and the labeling, that will change. And obviously we've seen the changes from the UK perspective. What people like Royal Mail, the way they've changed their CN22, the CN23, they've changed them to reflect the UK changes. It's the same in the EU. They're going through the labeling changes. What it means for you is you'll be asked for a bit extra information. You may be asked for your IOS number if it's an import, just to prove that you correctly charged VAT. You're certainly going to need a commodity code on it, HS code, a harmonized system of standardized codes. You can look them up on the EU's portal. It does take a long time. If you're doing enough of these, and I would say enough is maybe 100 or 200 shipments per month, look to automate this. And that's something, again, Avalara can help with. But these are the kind of informations that your freight forwarder will be asking you for. Then, as I say, it's going to have to include a commodity code. So think about automating that. Again, do reach out to us at Avalara. It's, if you're doing this on any kind of scale. And then lastly, once you've been registered, you've done the transaction, you've calculated the VAT, you've got your label right, you put your commodity code on, then you need to declare lastly on this to your Irish or your Dutch tax authorities, wherever you got your OS or IOS registration, and rather like the UK is doing, and then you're good to go. And it's relatively straightforward as that, but just it's a huge amount to take on. I'm very aware of that. So helpfully, just a reminder that we've put together this hub. Everything talked about is up there, and I always say to people that the best thing about what Avalara does is we're not tax advisors, so we don't charge people for guidance around this. Give us a call or drop us an email, and there's lots of people like me who handily are online or talk you through this. And should you need an extra VAT registration or commodity code, then obviously we would hope you think of us. But otherwise, you're free to ring up, abuse our salespeople. They love people like you being rude to them. It puts a smile on their face.
So I've got one burning question, Richard, which we haven't covered today, and I've not seen asked anywhere. And that is for the people that currently are registered with 6 or 7 different VAT authorities in Europe. How do they deregister? When they open an OS and they've only got to have one, do they pick one of the ones they've already got and stick with them? And what about the other 6? Do they have to notify them they're deregistering, or does the OS do that automatically?
No, great question, actually. And we sort of thought about that, but you're right. No one asks. I guess in that to-do list that I was just showing, we could add on that for that sort of situation. If you've got multiple registrations, the great news is you can deregister, and it's it's very straightforward. You contact the tax authorities, and most sellers use an agent like Avalara. Contact Avalara, notify them you want to close the registration, and they'll send a simple, sometimes it's an email, sometimes it's just a formal letter, PDF type of thing. And then the tax authorities will cancel it pretty much immediately. You'll have to fill in one last return maybe, and then you're done. And that's good news. So from a planning perspective, you've obviously got to wait for iOS and OS to become available, get registered, and Chris reminded us all 1st of April is the magic date when it should start. Then once you're into June, you can rely on 1st of July, you can rely on OS and iOS to report your transactions. So really there, you can close your foreign VAT registrations, and you'll probably have to do one closing return. If you get your timing right, it will be a nil return, and that's nice because typically a good agent like us, Avalara, will give you a discount for nil returns. But then you're done. Then you're very much done. And then in terms of your other question, which country? It doesn't matter. Yeah, whichever. If you're going to, it's a good point you're saying actually. If you're going to use a particular country, in our examples today, we talked about Netherlands or Ireland. Use that. You're already registered to go, and completing the iOS or the OS is just a supplementary form that goes in with your regular return. Yeah. So good. Yeah. Very good housekeeping point. I think there, Chris.
I just think people are going to save an awful lot of money on accountants or Avalara on filling out all these tax returns. Although I suspect you'll be kept very, very busy with all the other regulation changes going on, and still be in business.
Yeah, well, one in VAT, one door closes and three open is our experience. Being very open with it. All of that responsibilities are now with the marketplaces. I think Chris, it was really good you called out that marketplace one. That's the big one, and Avalara, that's who we're helping now. That's where our customers are.
Yeah. Unless the goods are over 150 euros, or you've got the goods in multiple warehouses for the marketplaces, in which case, please review a couple of slides back.
Yeah.
So what we're going to do, Richard, we're going to make sure that we've got a link to your hub that you've got on the screen here for free help and assistance alongside the presentation on Tamebay. So anyone that's watching that's thinking, how do I get there? Either Google it or look on Tamebay tomorrow. But I really want to thank you for your time today, Richard. It's been an amazing amount of information to get through, and my head's spinning just trying to figure out what's the best way forward. But I do like the idea of dumping 7 VAT registrations and going down to 1 OS wherever possible. And it may also be time for people to pick up the phone to your Avalara and just talk about their business and actually making some decisions. Should I be using marketplace fulfillment, or would I be better off with a single fulfillment, or would I be better off shipping from the UK? What's the pros for my business? What's the cons for my business? And actually, which one's best for the tax advantageous situation? So I think there's an awful lot to take in and digest, but thankfully we've got a few months. But thank you so much for your time again, Richard.
Not at all, Chris. Always a pleasure, and it is complex. But yeah, as you nailed it. There's a lot of money to be saved if you push through the complexity.
Excellent. Thanks for your time.
Thanks.